What's going on, YouTube? It's your boy Tryhard bringing you in. No, I didn't like that one. Well, guys, I'm gonna keep it to you simple.
We do not care.
Hello and welcome, YouTube.
Brother, this guy stinks!
We got that horrible intro out of the way. Thank you guys for coming back and watching the second official YouTube video. We have now posted more videos this week than I have posted the entire last year. I am on fire. I told you guys I was going to bring you more videos this week, so we're doing exactly that. On today's episode, we're going to do the 3 things that I wish I knew when I first started trading. I started trading 3 years ago, so we're going to go over the 3 things I wish I knew when I started back then. So let's get into it. Thank you guys. All right, guys, let's get right into it. So 3 things that I wish I knew when I first started trading. I wrote them down right here on a piece of paper so I wouldn't forget the main topics of each. So we're going to go over indicators, risk management, scalping versus swing trading. Those are the 3 things I want to touch on that I wish I knew when I first started. So first and foremost, indicators. I've been trading for 3 years. My entire first year was spent wasted on indicators because when I first started, I was on YouTube. I was doing information. I was learning everything I could about YouTube, and I ran into some YouTube channels that saying, hey, indicators are the best thing when trading. So I dove into those videos. It was so many videos I was looking at just indicators. They said, hey, when you're trading, having 7, 8 indicators on your screen will help you predict the market, and I believed it.
Cups of the rose, bitches in my whole phone. I should call one and go.
I was on YouTube, I was grinding, I was testing out every single indicator known to man, trying to see which one will correlate with each other, which one would tell me the best outcome. And the whole first year of my trading career was spent on indicators. So now what I want to tell you guys is, now that I'm getting to the point where I'm at, where I'm a profitable trader, I'm starting to teach people. First and foremost is indicators suck. Oh! You don't use them, you'll never use them. There's one indicator I use, and that is the moving average. And I use the moving average just as a support and resistance, just as an extra support and resistance. I've met many traders, many profitable traders, and I'm gonna tell you this right now, not a single one of them use anything else. The reason why I don't use indicators is just, guys, technical trading, mark down your charts, you know, top down trading from higher time frames, lower time frames, nothing's gonna predict the market, and most of these indicators are lagging behind. So in reality, they'll never give you useful information to use at the right moment. So that's why I suggest that you guys just stray away from learning indicators, researching indicators. Just skip the indicators as a whole. If you want to use an indicator, use a moving average, throw it up on your chart, see how you feel about it. You don't need it. I like to do it just because of a visual, and it does help me a little bit, but I could go about my trading career without having to use it. So it's completely up to you guys for the moving averages, but everything else, guys, save yourself some time, save yourself in hassle, skip everything else. It doesn't work. No top trader, none, zero use those type of indicators. Okay. Risk management. Now this is probably going to be ending up, I'm gonna make a whole nother video on just risk management and all that, but I definitely want to put this in there because when you're first starting to trade, this is probably the hardest thing for you to learn when trading. Most people think when you're first starting to trading, hey, the most important thing is how to mark up your charts, how to find good indicators, how to do this, how to do that. It's not really that. Remember, there's a good saying that they say, like, trading is like 20% marking up your charts, and then the 80% is psychology, your mindset, your risk management. That is 100% true. Until you guys really put this in your head that trading is more risk management, more psychology than chart analysis, you guys would be profitable. You guys need to understand that me and you, we could take the same exact trades. You might be able to blow your account and I'll become profitable on the same exact trades. Why? Because you guys might be over leveraging. Your stop loss might be different. Your take profit might be different. You might not know how to take partials. You might hold it too long. You might get greedy and try to throw another loss size in there. There's just so many outcomes of trading that you guys, if you don't have your psychology and your emotions under control, you guys will fail. Even if we take the same trades, same exact trades, one of us might still fail. So this is going back to that risk management. Like, you guys must know, hey, your stop loss, like if your stop loss is supposed to be 1 to 3%, 3% being on the higher side of your initial account. So you guys really got to get that under your mind. If I have a $100,000 account, I'm only risking 1 to 3% per trade. What does that mean? That means if I lose my trade, I'm only going to lose 1 to 3% every single time. No matter if my stop loss is 40 pips, no matter if my stop loss is 10 pips, no matter what it is, you will always risk only 1 to 3% on each trade. Risk management. Okay, guys, that is the most important thing for you to start trading profitably. It is the most important thing. Forget everything else. Chart analysis comes with more experience. As you mark up more charts, you'll get the hang of it. You'll see some things that other people don't see. Have a trading plan when you're first starting. And if you're not profitable, then this is the same to you. It is the most important thing. Have a trading plan. Have a list of rules. Get yourself a note card. Rules 1, 2, 3, 4, 5, 6, 7. Write it down. Hey, only trade at this time. Only trade these days. Trade this pair when there's a breakout, whatever you want to do. Whatever your trading plan is, write it down and follow it. Because if not, you are gambling. We are not gambling here. We are trading. And to trade, you need management. You need a plan to go about it. That means get your emotions out of it. Don't get stingy. Don't get greedy. That is the biggest thing too. Being greedy in this market, not getting out, not taking partials when you should, will kill you in the long run. It will absolutely kill you. When I first started, I know you guys see the quick money. You see, oh, we're up 1,000. Maybe it'll go up to 2,000. Oh, we're at 2,000. Hold on. Let me push it a little bit more. Let me squeeze out everything I could. No, don't do that. If anything, at 1,000, when you got to 1,000 profits, you should have taken half of it out. Let the other half run. That's it. That way you secure your profit. If that one turns around, guess what? You can close it and you'll still be in profit because of that half that you took out already. So this is something you guys need to start rewiring in your brain. It is the hardest part about trading. It is your mind trying to get greedy, trying to get as much money out as possible, and it just doesn't work out that way. So this is my most important tip of all the three. This is the most important. Risk management is the biggest thing here. The last point I want to touch on is scalping versus swing trading. Now, this is going to be a little touchy subject because I know some of you guys are scalpers. Some of you don't really like swing trading, but I'm going to explain myself. When I first started, I was a scalper. I used to scalp US 30. I used to scalp NASDAQ, SPX, all of those, and I did great. I was making great money scalping. You guys have seen the previous videos. Some of you have seen my profits that I made over scalping, but now I am swing trading. Now I swing trade. I hold trades for a couple days longer. It's better. It's more profit because the way I want to explain this is you guys need to think about why we started trading in the first place. It's because of course, you guys wanted more money, but the most important thing is that you guys wanted more time. If you're making $1,000 trading a week and your job is paying you $1,000, which one is better? Obviously trading, because you spend less time trading than you would at an 8-hour job. So what we're trying to get back is our time. When you guys are scalping, you're watching the charts nonstop for hours, because one 5-minute wick could stop you out, and you guys want to be on track. You want to be watching the charts, making sure you don't get stopped out, making sure you might have to do something, manage the risk and anything like that. So that's why scalping I'm not a fan of anymore. It's great when you first start. It's great if you have a smaller account. If you have a smaller account, go ahead and scalp it, scalp some SPX, try to build your account up until you can start swing trading, because swing trading is initially where you guys should try to get your trading to. It's much easier on higher time frames, on the daily charts and the 4-hour charts. The charts look simpler. It's more easy to read. You guys could take better trades. You guys, market won't wick you out, won't stop you out, because these are longer time frames. These are higher time frames, so they're easier. Now, when you're getting down to the 5-minute, the 15-minute, the 1-minute charts that you guys like using, you can't predict those. One wick might just stop you out and you're done. That's it, you lost. You guys watch a lot of people that make a lot of money scalping. The reason being is they have high accounts. They are throwing 15 lots, 20 lots, and aiming for 10 to 15 pips. You can't do that with your $100 account. You can't do it with your $500 account. Matter of fact, you can't even do it with a $1,000 account. It doesn't work that way. It doesn't work that way. You guys trying to do that is going to blow your account. You guys trying to go in there with just a 0.01. Yeah, you might make money. You might make a couple hundred. You might make maybe even 1,000. But you guys got to think about it. How profitable is it going to be in the long run? You're not always going to catch that $1,000 trade. You're more than likely, you're going to catch those couple hundreds. If you're a good scalper, you'll catch a couple hundreds because you have a small account. Those couple hundreds, that's not going to pay the bills at the end of the month. Now, vice versa, if I'm swing trading, I could throw a 3-lot, 4-lot, comfortably, safe, stop loss set. I could let it run for 100 pips, 120 pips, 80 pips. Matter of fact, let's say we just get 50 pips. That trade alone, being profitable, will pay me more than you with your $100 scalping technique for the week. Remember these tips. If you don't agree with them, hey, that's fine. Everybody's entitled to their own opinion. If you don't like the way I'm saying it, go look at information on your own. If you still want to go through it with it, then hey, good luck. But thank you guys for watching. I'll see you in the next video. See you.